Welcome back. You're tuned into Chartbusters. You're on cnbc TV 18. Well, Dixon Technologies, that's a stock that's buzzing today. And in fact, it's been buzzing as well in this year itself. Now, the board will be considering some fundraising plans. We want to know more, and so do you. So let's get to the management. We have the MD with us, Mr. Atul Lall, who joins us. Hi, Mr. Lall. Thanks so much for joining in. Well, sir, if you could give us a few details out here. What is the quantum of funds you're looking to raise? Why are you looking to raise this money? And also, you mentioned bonds as well as equity issuance. Is it going to be a mix of both, or is it just going to be equity dilution?
This is an enabling provision. We're just approaching our AGM, and the enabling provision is valid for a year. So we are taking it to the board meeting, which is happening on 21st. Please appreciate that our cash flows are good. Our debt to equity and debt to EBITDA is extremely low. Current quarter, almost all factories are back to 100% capacity utilization.
Okay.
However, there's a very significant tailwind in our industry. We have submitted 2 applications of the PLI scheme for mobile. We are looking at capacity expansion across all our verticals because of this traction. Also, we are looking at new vertical of refrigerator. So this is only an enabling provision, and the quantum, if at all we go in for the equity raise, is going to be very small.
Could you quantify small, sir?
I'm not in a position to do that because it's going to be decided by the board in a couple of days' time, but it's going to be a small number. 200-300
crores or sub 500 crores? Can we go with that at least?
Yes, significantly lower than that. Yeah.
All right, significantly lower than that. Mr. Lall, you said that you have taken, a provision, or you submitted 2 applications under the PLI scheme for mobiles. Any clarification on by when you could get the approvals for them? And once you do get the approvals, what sort of revenue potential could this be for you?
So we are hopeful that by this month end, we are going to hear from the government, and hopefully the approvals will be announced. We are planning to create a capacity of almost 50 million smartphones over the next 4 years. Finally, the revenues, once the capacities are established, and we've already almost finalized with some large global brands for both exports and domestic market. In mobile alone, we're going to generate revenues of almost 12 to 15,000 crores in the next 2 years' time.
12 to 15,000 crores, that's quite a number that you're talking about, Mr. Lall. If you could, tell us, there could be a fair amount of competition as well. We've heard of Google, Jio, all of them entering this space. What makes you confident of beating the global mobile players in this and perhaps getting the sort of revenue that you're talking about?
So please appreciate, in Dixon's case, we are an outsourcing company. We're not a brand. We'll be manufacturing for the brand. And our deep relationship with large global as well as domestic brands puts us in a very strong position for tying up with these brands and manufacturing for them. And we're already there. So please be rest assured that we are confident of generating these kind of revenues from a mobile stream in near future.
Okay, all right. Those numbers you gave are quite big. If I got that right, you're looking at 50 million phones?
Yeah. So the final capacity is going to be 50 million phones.
Okay, so 50 million. You must be having a rough number that you'll need to put in, right? What could be the capital expenditure to set up this sort of a facility?
So we have applied, there are 2 applications submitted to the government.
Yes.
If we get the approvals for both, the investments would be in the range of around 500 to 550 crores.
And how much of that would be raised externally and how much of that would be funded internally?
A large part would be funded internally because we have very good cash generation from our existing operations.
So the remainder is what you are looking to raise funds for this enabling resolution of sub 200, 300 crores that you're talking about. Is that so?
That's right.
Okay, all right. A couple of numbers then in terms of business. It was good to hear that you're saying that most of your facilities are now at around 100%. So good on you and good for your investors as well. Give us a couple of targeted numbers in terms of TV sets. For FY21, what is the number are you looking at in terms of sales? I think in FY20 you did around 2.1 million units.
So we did 2.1 million units last fiscal. This current quarter looks very good. The order book, even post Diwali, is looking very, very healthy. However, I'll be slightly skeptical in giving guidance on these numbers because we're still going through a challenging time. There can be more lockdowns, there can be more issues. So I don't think it's very prudent for me to give the numbers as such.
Mr. Lall.
But in spite of the first quarter challenges, I'm sure there'll be growth in the TV segment.
Mr. Lall, a couple of analysts are even factoring in 20% growth. You think that's gettable? We're not telling you to make a commitment out here. But do you believe, looking at the kind of demand and kind of order book that you have, a 20% growth is gettable?
I'm keeping my fingers crossed, but it is definitely achievable.
All right, achievable in light of the fact that you've done around 62% revenue growth in the previous year itself. Final point, Mr. Lall, you said you are entering the new vertical of refrigerators. If you could tell us how much capex are you laying for this business? When does the revenue accrue and how much revenue are you expecting from this?
So we are planning to put in almost 150 odd crores for creating a capacity of 0.7 million refrigerators or the direct cool kinds to start with. And this project will go on stream in 22-23. The conceptualization is happening at present. And once it's done, then we expect the revenues of almost 550 to 600 crores from refrigerator.
All right, fair point, Mr. Lall. Wish you good luck for the remainder of this year. 20% revenue growth is what the street is working with. You expect this to be achievable. More importantly, we'll keep an eye out on the month end, where you are likely to hear from the government on the PLI scheme for mobiles. So that's about Dixon Tech. The stock at the high point of the day. In the last 1 year, we've seen the stock move almost 250 odd percent. So the street is definitely watching out for this one. With that, we slip into a short break. But before we do that, here's a daily series by Money Control Pro's ACE research team. It's called Ideas for Profit. It gives readers investment arguments for a company. The comprehensive article covers analysis of a company's financials, business prospects, industry trends, and valuations.